Hello everyone, welcome back to the Tree Pockets. In this video, I'm going to be discussing why Warren Buffett, one of the world greatest investor, the guy we ever know as the world greatest investor, why he loves dividend stocks and why he loves investing in dividends. Because of what they stand for, how they can make you rich over time if you can be patient enough, and if you can keep reinvesting those dividends, and to become a snowballing effect. Okay, so folks, let's dive into the analysis. Why, like I said before, I will be explaining why Warren Buffett immense wealth is largely built not on rapid stock trading but on a disciplined long-term dividend investment. Okay, his approach focuses on acquiring shares in high-quality, reliable companies that consistently generate profit and return cash to the shareholders through dividends. Buffett's philosophy emphasizes buying excellent businesses at reasonable price, holding them indefinitely. That he even once said that we buy and we hold forever. Okay, that phrase came from him. Hold them indefinitely and reinvest dividend to compound wealth over time, because that's when the magic of compounding. What Albert Einstein called the 88 wonders of the world. Okay, and this is why Warren Buffett loves dividend stocks. One, dividend stocks as reliable cash flow engine. Okay, now Buffett prefers for dividend paying stocks stem from the ability to provide a dependable stream of income regardless of the market fluctuations or market conditions or economic conditions. Unlike growth stock that may not pay dividends, dividend stocks give tangible return in cash, which Buffett reinvests, fueling compounding growth. Like I said before, the magic happens with compounding. The cash flow flows separately. Focus separate Buffett from investors, or what this cash flow flows is what, or this cash flow focus is what separates Buffett from other investors. Other investors chase momentum or market timing, highlighting a more stable and predictable wealth building methodologies or method. Long-term holding period, that's number two. Long-term holding period amplifies return. Okay, this is point number two. Buffett's mantra of holding stocks forever underpins the power of compounding dividends and share price appreciation. By not selling winners prematurely, it allows the dividends to accumulate and reinvest, turning modest yield into substantial income and income over decades. The example of Coca-Cola, with a yield on costs exceeding 50%, illustrates how patient investing transforms initial investment into massive annual payouts. And this number three, dividend reinvestment creates a self-fueling engine. This is where and when the magic happens. This is where about Albert Einstein calls the compounding the 88 wonders of the world. Dividend don't just provide income. Buffett uses them as a capital to build more shares of dividend-paying companies. This reinvestment strategy accelerates growth and income generation, akin to snowballing, rolling down the hill, example I gave before. The repetitive cycle of earning, reinvesting, and earning more dividends compound wealth exponentially, which is the cornerstone of Buffett's dividend empire. Number four, diversification across sectors preserves stability. Buffett's dividend portfolio spans sectors like consumer goods, financial, technology, and energy, balancing stability and growth. Companies like Coca-Cola and American Express offer steady, recession-resistant income, while newcomers or new peaks like Apple, which is in the tech sector, and Chevron, which is in the energy sector, add growth potential and inflation protection. This diversification helped Berkshire Hathaway maintain cash flow through economic cycles and market fluctuations or disruptions. And number five, number five is modern dividend strategy incorporates capital appreciation. This is what Buffett does a lot as well. While Buffett valued dividends, he also recognized the importance of companies that reinvest profit wisely. Apple, for example, exemplifies this hybrid model. It pays a modest dividend but primarily generates value through innovation, product development, and share buyback. This flexible approach enabled Buffett, or Warren Buffett, to capture both immediate income and long-term capital gain, tailoring his strategy to the business model of each company. And number six, energy sector as a growing dividend source for Buffett. And at the same time, we're going to look his most recent add-on to his portfolio. Buffett's recent focus on energy, which are these companies like Chevron, Occidental Petroleum, reflect a strategic shift and leverage high dividend yields and growth potential in a sector benefiting from sustained high oil price. These investments provide both steady cash and not just only steady cash and inflation-linked income growth, enhancing Berkshire Hathaway's dividend income profile in a changing economic landscape. Now, disciplined capital allocation principle guides dividend decision. This is very critical. Buffett's decision to favor dividend or reinvesting hangs on a company's ability to generate value exceeding its cost of capital. If a firm cannot deploy cash profitably, returning to the shareholders via dividend is preferred. Otherwise, reinvestment is prioritized. This principle ensures that Berkshire Hathaway capital allocation maximizes long-term value creation and maintain the integrity of Buffett's dividend-focused system. And on this is my take, or this is my final analysis on this, on why Buffett prefers or loves dividend investment. And it does make a lot of sense. Although not everybody wants dividend investment, because some things you have to wait a long term before you can really benefit. You have to wait 10, 20 years or 30 years, 40 years before you can really benefit. But that is the magic of it. On the final analysis, Warren Buffett's legendary success is rooted in a simple yet profoundly effective dividend investment philosophy. Buy great business, hold them indefinitely, and let dividend compound into a vast and growing income streams. His ability to marry income generation with capital appreciation across sectors ensures steady cash flow, resilience through market downturn or through market disruptions, and the flexibility to seize new opportunity. Buffett's approach teaches investors the power of patience, quality, and disciplined reinvestment. Principle that can build enduring wealth for generations. So folks, if you've enjoyed this high octagon analysis, I want you to smash that like button and set that notification bell, and most importantly, subscribe to the channel, because it's a place where we'll bring you everything about finance, business, and self-development, where we don't just show you about finance or investment, but we also show you how you can along the way have discipline to invest, build discipline that is required to create wealth over time. Okay, so it's finance, business, and self-development. So folks, until next time, thank you for watching. We love you, and take good care of yourself and each other. God bless you. Bye bye for now.